Omkar, good to have you on board. It is likely to be a critical quarter for TCS this time around. What is it that you're expecting in terms of their revenue growth? The ET now poll is penciling in that led by the digital and the cloud verticals, it is going to be strong. And are you expecting that margins as well could improve sequentially on the back of the currency tailwind and a number of other factors?
Yes, definitely. TCS for the quarter is likely to, we are expecting around 1.9% of the Q-on-Q growth in USD terms, and in the rupee terms, we are expecting around 4.4% on Q-on-Q basis. However, the spends on the IT will likely to be remain rigid or the robust, even if there is an uncertainty in global. Even Accenture results have shown the same thing. The only thing that concerns about me is the commentary from the IT spends, and if there is a spend cut from the discretionary spends, especially from the retail and CPG and other verticals. BFSI, we are expecting around strong expenditure will likely to continue as the data for security and cyber security is likely to be continue. So in my opinion, the IT sector as a whole will likely to perform good. Even TCS have done with their salary hike or employee wage hikes in the previous quarters. That will help them to they help them to expand the margins on around 50 to 60 basis points on EBITDA level and around 40 basis points on the quarter-on-quarter basis. So we believe that the margins are likely to be more on the flattish side, around 23.5, 23 points on quarter-on-quarter basis for this quarter as well. However, the commentary should be looked upon on vigilantly to spending outlook.
Omkar, purely because of the market positioning, the fact that the street is currently underweight the entire IT sector, do you think the scope of the scope of disappointment, of course, is lesser in that sense? Because even an inline set of number or commentary would bring a lot of sigh of relief, and perhaps these stocks would jump up in that case.
Yes, the stocks already been cutting down and have already corrected well from the year to date around 40%. The TCS is now trading at around 24 PE multiple, which is likely to be in better pricing. The kind of expectations towards the IT spend cuts or IT services, or that on the demand side because of the uncertainties, we are not that kind of an impact we are seeing. Even in the Accenture yes, definitely the momentum is likely to be slowing down a bit, but I think the robustness are still there. Many of the businesses are becoming system driven, not only on the cost optimization side, but also revenue side. That will help them to gain more revenue, and dependencies is getting very high of these businesses on particularly on this IT services as a whole. So we believe, the overall dependency has been increasing. The demand is likely to be seen, and the valuation has been corrected well, and we believe that it's been opportunity. So we can see a lower downside potential for this at this point of time.
Thanks very much, Omkar, for joining in and walking us through your outlook for TCS and the valuation picture as well.